Hello, welcome to GRA TV, the trusted source for tax information. As a follow-up to our last video with Mr. Lawrence Hotsonyame, we asked you on Twitter, Instagram, Facebook, and all our social media channels to ask us any questions you have about income tax. And of course, we got him to answer your questions for you. So enjoy this video.
The Income Tax Act or the Revenue Administration Act prescribes that any income that is earned in a foreign denominated currency, either a dollar or a pound or any foreign currency, should be converted to Ghana cedis. You know, Ghana is the official currency for purposes of computation of taxes. So, however, the law permits persons to disclose or file returns on currencies other than the Ghana cedi. However, for purposes of tax computation, Section 21 of the Revenue Administration Act provides that such foreign currencies would have to be converted to Ghana cedis. And once the conversion is done, we can calculate the taxes appropriately using our domestic tax law. So basically, that is how taxes are converted, are calculated or charged on foreign currencies. So the first most important incentive is that it gives the platform for the Commissioner General to be able to assess you fairly. It gives the opportunity for the Commissioner General to come out with your accurate computation of your taxes. And that is the first incentive. But when you file tax returns, it is only then you are qualified for any other benefits under the tax law. For example, the Commissioner General can only issue with a tax clearance certificate on condition that you have filed your returns. Also be entitled to reliefs. For example, all resident individuals are entitled to claim reliefs, but such reliefs can only be granted to you when you file returns and you apply for those reliefs. So, and then if you want to claim a refund, one of the conditions for getting a refund, for example, is for you to file your returns. So filing your tax returns online, it's very, very important. It helps the Commissioner General to accurately determine your tax liabilities. When you are entitled to reliefs, you can claim those reliefs per your application. And then when you are qualified for a tax refund based on the returns that is submitted, the Commissioner General will be able to grant you those refunds. So these are some of the incentives that are available. I want to believe that Jules wants to find out how to apply for tax reliefs. How to apply for tax reliefs when you want to file for your income tax online. Like I indicated, we have several tax reliefs: marriage and responsibility reliefs, child education reliefs, disability relief, aged dependent reliefs. These are all reliefs that are available. If you want to apply, you just go to our website, download the application form, complete it and submit it online. You can submit it online or you can submit it physically in one of our DTRB offices. And then we'll process it. The Commissioner General will look at the reliefs you have applied for and grant you approval on only the reliefs you are qualified for. For example, if you are not married, you may not be entitled to marriage relief. Or if you do not have children in school in Ghana, your children attending school in Ghana, they may not be entitled to child education relief. So the Commissioner General will only grant you approval for the reliefs you have applied for. And once the approval is given, the information will be communicated to your employers, and then your employers will grant you the relief upfront. So that is how you benefit from it. To go to our website, download the application, complete it. You can submit it online, or you can submit it personal or in person in any of our GRA offices across the country. We'll process it and then approve the reliefs that you are entitled to. Thank you very much, Maxwell. You realize that GRA is moving online, and most of our transactions currently are happening online. And so we're trying to move away from our manual processes of issuing documentations and all that. Now, when your withholding tax is paid online with your TIN, and all individuals, your TIN is the Ghana card number. Your Ghana card number. Once your TIN is used by the withholding agent to pay your withholding taxes, the system automatically credits your account with GRA. So you can just walk into any GRA office with your TIN, that is your Ghana card number, and you can check your balances, whether the taxes that were withheld at source were duly credited to your account, and the system will do that adjustment. We are still issuing the tax credit certificates, all right, but moving forward, we're hoping that we'll get to a system, we'll get to a stage where all these things will be done electronically. We'll issue the TCCs electronically. Your account will be credited automatically when the withholding agent makes the payment on your behalf. So that is the direction we are going as an authority. Like I indicated, we're moving away from our manual processes to digital processes. We want to get these things done electronically. Yeah, thank you very much. Withholding tax, like we all know, are taxes that are deducted at source by a withholding agent. When the withholding agent engages a third party, and then the withholding agent deducts the taxes at source and pay to the Commissioner General. So most of our taxes are subject to tax on the withholding tax basis. So for example, salaries that are paid to all employees are subject to withholding tax. Dividend, for example, is subject to withholding tax at the rate of 8% final. Interest is subject to withholding tax at the rate of 8% on account. Royalties is subject to withholding tax at the rate of 15%. We call it natural resource payment. Natural resource payment are also subject to withholding tax at the rate of 15% on account. Rent is subject to withholding tax depending on what the property is used for. If the property is used for residential purposes, then the withholding tax is 8% final. But if the property in question is used for commercial purpose, then the withholding tax is 15% final. So these are all the 8 classes of incomes that are subject to different withholding rates. Supply of services goes for 7.5%. Supply of goods is subject to a withholding of 3%. Supply of works go for a withholding of 5%. So these are withholding taxes, and basically withholding taxes apply to income. The various classes of income, all of them are subject to some class of withholding taxes. Now, when it comes to VAT, VAT takes the character of withholding taxes. It takes the character of withholding. Let me just explain. VAT is a consumption tax. So the person that is charging the VAT is only acting as an agent. You know, when the customer or the trader walks to a shop and buys a particular product, and the VAT is supposed to be calculated on that product, all the trader, the person who is selling, or the trader is required to do is to charge the VAT on the product. And once the VAT is charged on the product at the point of sale, the person will now have to account for that VAT to the Commissioner General or to GRA. So VAT also takes the character of withholding. Just that this one, the trader, who is the taxable person, is required by law to charge the VAT on the supply of taxable goods and supply of taxable services. And once it's charged and for the VAT, is required to account for it to the Commissioner General. But the VAT is a consumption tax purely on goods and services. But the withholding tax that I explained earlier on is on income. Free zone companies are classified under businesses that enjoy tax concessions in the 6th schedule. So, for example, all free zone companies are granted a tax holiday of 10 years for their corporate income tax only. So when you're a free zone company, your corporate income tax is exempt from tax from the day of your commencement of business, 10 years from the day of commencement of your business, your corporate income tax is exempt as a free zones company. Free zone companies are not liable to pay corporate income taxes. However, there's obligation on them to pay PAYE for their employees. So if you're a free zone company and you have employees, you are a withholding agent, so you have an obligation to withhold the taxes and pay to the Commissioner General, GRA. If you're also a free zone company and you do business with third parties, you are a withholding agent. So the law imposes obligation on you to withhold when you are making payments to third parties. When you're making payment to third parties as a free zone company, you are under obligation to withhold the taxes using the appropriate rates and pay to the Commissioner General. And that is the position of the law when it comes to free zone companies. It is only their corporate income taxes that are exempt from tax for the very first 10 years from the date of commencement of business, after which that income becomes taxable within the context of the Income Tax Act. General Safo, thank you for your questions. All persons who earn income in this country qualifies to pay income taxes. And like I indicated, all employees, for example, are qualified. All sole proprietors. Once you are a sole proprietor or one-man business, you qualify to pay income tax. All employees qualifies to pay income tax. Companies pay what we call the corporate income tax. So all companies are required to pay income tax. Partnership firms, all companies that are incorporated as partnership, yes, the law imposes obligation on you to pay taxes. Partnership under our laws are transparent. The law itself will not tax partnership as an entity, but the law allocates profit that is made to partnership. The law allocates that profit to the various partners. So partners are also supposed to pay taxes on their income. All other entities, whether those entities are trusts or body of persons, once you earn an income, the law imposes obligation on you to pay taxes. When you are a landlord and you receive rent income, you are under obligation to pay taxes. If your employee or your tenants withhold the taxes appropriately, then that is it. But in circumstances where your tenants are exempted from the obligation to withhold, if you're a landlord, you would have to disclose your rent income receipt and pay the taxes appropriately. Persons other than individuals who are paid interest are required to pay income taxes on the interest received. Companies that pay dividend to shareholders, yes, when you are a company, a limited liability company, you pay dividends to your shareholders, the law says that you should pay a tax on the dividends that you are paying to your shareholders at the rate of 8%. So the class of incomes that are subject to income tax are varied. And so, but the law generally classifies these incomes into three: income from business, employment, and investment. Once your income falls in any of these three categories, there's an obligation on you to file returns and pay accordingly. Yes, bonus is taxable. Bonus payment is taxable. It is part of the employee's total cash emolument. So bonus payment is taxable, but it is taxable at two levels. The law says that if your bonus payment, the bonus payment that you have received does not exceed, or the bonus payment does not exceed 15% of your annual basic salary, then the bonus payment that you have received should be taxed at a rate of 5%. So you compare your bonus payment to 15% of your annual basic salary. If your bonus payment is less than 15% of your annual basic salary, then you tax the entire bonus at the concessionary rate of 5%. However, if your bonus payment is in excess of 15% of your annual basic salaries, then up to 15% of your annual basic salary will be taxed at 5% final, and the excess will be added to your employment income and tax. This is how bonus is subject to tax. So to repeat myself again, bonus is an employment income. Bonus is taxable, and it is taxable at two levels. Bonus up to 15% of the employee's annual basic salary is taxed at the concessional rate of 5%, and bonus payment in excess of 15% of the employee's annual basic salary, the excess is added to the employee's income and subject to tax at the appropriate rates. It is only income for government employees, for example, PAYE, is deducted as source. Means I agree with you that when you are an employee, your employer has an obligation for your income to be deducted as source. Your employer has an obligation, but that obligation is not conclusive. There is also an obligation on the employee to file an annual returns at the end of the business period. So apart from the withholding taxes that your employer deduct at source, every employee in Ghana is also under obligation to file the personal income tax returns at the end of the year. And so the obligation to deduct at source is on your employer, and the obligation on you as an employee to file your annual income tax at the end of the year, to disclose all your income, including incomes that you earn outside your employment income. So the law imposes obligation on you to make a full disclosure of all the sources of income, and then the Commissioner General will aggregate those incomes and then subject it to tax. If there are any deductions or there are any reliefs that the Commissioner General will grant, yes, those deductions will be granted and will arrive at your chargeable income, and the taxes will be calculated using the graduated rates that you can find on our website. Thank you. Yes, that is true. Provident Fund, the calculation of taxes on Provident Fund is provided for in both the Income Tax Act and in the Pensions Act, and it provides a ceiling of up to 16.5%, which should be contributed either by the employee alone or by the employer alone or both. Now, if the 16.5% of the employee's monthly basic salary is contributed by the employee alone, then that whole amount will be granted to the employer as a relief. That whole amount that the employee contributes will be granted to the employers as a relief. When out of the 16.5% of the Provident Fund contribution, that is the ceiling, if, for example, the employer contributes 10% and the employee contributes 6.5%, then the employer will be entitled to claim the 10% as an allowable deduction. When the employer is calculating their chargeable income, they will be allowed to deduct the 10% of the provident contribution as an allowable deduction. Then the employee who contributes 6.5% of his monthly basic salary will also be entitled to claim the portion of his contribution as a relief. Any contribution in excess of 16.5% will not be granted as a deduction or a relief. And so GRA will grant you a deduction up to the ceiling. If the whole 16.5% is contributed by the employee will claim that entire 16.5% as a relief. If the entire 16.5% is contributed by the employer on behalf of the employer will claim it as an allowable deduction. If they share the contribution, then both the employer and the employee will claim their respective shares as an allowable deduction. Thank you very much. Thank you very much. Tax stamp is a presumptive tax. It's a presumptive tax that is introduced by the Income Tax Act 2015, Act 896. And it provides for persons that are doing very micro businesses. We call it micro businesses. The law says that any group of persons whose annual turnover is less than 20,000, if your annual turnover for 3 consecutive years in average is less than 20,000, then you qualify for a presumptive taxation based on installments. And these are the categories of taxpayers that we call the tax stamp taxpayers. Micro businesses, small businesses, annual turnover. The average annual turnover for 3 consecutive years should not be more than 20,000. So when your annual turnover for 3 consecutive years exceeds 20,000, you do not qualify under the tax stamp regime. The tax tab regime is only meant for traders, petty traders, micro businesses whose annual turnover for 3 years in average falls below 20,000. And those are the people that pay small taxes, small taxes we call the tax tab. And some of them range from 20 cedis a quarter, 25 cedis a quarter, 30 cedis up to 100 cedis a quarter. The law, the LI, the legislative instrument for the income tax, have provided for the rates that should be used to tax those micro businesses. And so when you see our officers, GRA officers, walk to your offices and requesting that you pay tax tab, these are taxes that are meant for micro businesses, individuals and it is meant only for individuals in business, individuals that are conducting business only, and individuals whose annual turnover does not exceed 20,000. Then you fall under presumptive taxes based on installment and will be required to pay tax tab. The position of the law is that gift is taxable. Gift is subsumed under the 3 classes of income. So when you earn an employment income and you receive gift in respect of employment, we add the value of the gift to your employment income and tax using your graduated rate. When you receive gifts in connection to your business, we treat it as business gift. We add the value of the gift to your business income and tax it accordingly. In the same way, when you receive an investment gift, maybe you have been given shares, maybe somebody has given you shares, we call it investment gift. We look at the market value of the gift, we add it to your investment income and tax. However, the law makes an exception for individuals. That individual that receive gifts could elect, they could make an election that gift should be subject to a final tax of 15%. And when you make that election, the value of the gift will be subject to tax at the rate of 15%. And in that case, that gift will not be added to any of your incomes again. So generally, that is the position of the gift. The gift is taxable. It is part of your respective class of incomes that you earn, depending on what kind of gift is it. But in the case that you are an individual, the law says that you can make an election and that gift will be subject to tax at the rate of 15%. Final. Thank you. Daniel, thank you very much. Unlike the UK, where they clearly have an inheritance tax, yes, in our domestic tax law, the income tax, we do not have an inheritance tax. There's no clear provision for an inheritance tax. So that is the position currently. However, when you inherit any property from anybody and you later on decide to sell that property, then the tax comes in. When you inherit a building or you inherit a property and you decide to sell off that property, then we begin to look at the tax implications. Then capital gains can kick in. And that is the position. But on the face of it, you do not have inheritance tax. But when you inherit an asset, you are disposing of that asset for a gain, then we'll be looking at the capital gains tax component of the asset that you are disposing of. And then we'll calculate the taxes appropriately. That is the response to your question. Inheritance tax is not clearly stated in our laws. Thank you.
I hope all your questions have been answered. And as always, if you have any questions on any tax issues, continue to send us messages on our social media platforms, on our WhatsApp channels, and also through our email address info@gra.gov.gh. Or you can also visit our website for more information. Thank you.